Most people think the number one expense for retirees in retirement is healthcare, but that's because nobody adds up how much retirees pay for taxes. And taxes, hands down, is far and away the number one thing you're going to pay for in retirement. Welcome to Wealth Creator Radio, where we help people overcome the uncertainty of having enough retirement income. I'm your host, Eric Heckman, a certified financial planner with over 30 years of experience. We want you to enjoy life and not have to wonder where your money will come from and how long it'll last. My mission is to show you how to develop a personalized income plan so you can retire more and have worry less wealth. Here at Wealth Creator Radio, we cut through the noise and get straight to what matters. We understand that the world of retirement planning can be filled with confusing products, ever-changing tax laws, and volatile markets. That's why we're here to help successful people like you navigate the uncertainty and create a blueprint for a thriving, work-optional life.
Pillars are a classic feature of architecture. I think we can all think of one or two well-known structures with those solid columns, out in front. And you think about, well, what would happen if one of them toppled down, right? The whole thing might come down. Well, it's the same for retirement. And we're going to get into that here in just a minute. Thank you for joining us today. You are listening to Wealth Creator Radio with Eric Heckman. I'm Lou Ann Fulmer. Eric is a certified financial planner. He's been helping people like you have remarkable retirements for over 30 years now. And it's Eric's mission and his team's mission to help you plan for lifetime income, to help you weather almost any economic storm that happens throughout your retirement. Call or text the word visit to 800-454-1184. The appointment is complimentary. Remember, you can get that digital toolbox as well. We'll be talking about that. Listen for your chance to text the word toolbox to 800-454-1184. It includes the books that Eric has written. And our podcast comes out every Tuesday morning. So wherever you listen to podcasts or on YouTube, search for Wealth Creator Radio. And Eric, hello to you. So excited to be here with you.
Yeah, Luann, it's always good to kind of get back to the basics and, talk about those main pillars of retirement and what the main things that people need to be thinking about, because sometimes we get distracted with all the shiny objects or whatever you want to call it, right? So sometimes just going back to the fundamentals is good.
Right. So looking at the St. Joseph Basilica, and the pillars there, I mean, such beautiful architecture and old, and it really does matter, I think, if something would happen to one of those structures, it would affect, the entire building, right? Yeah.
So, anytime you're talking about those structural pillars, those things that hold up the whole thing, right? That's kind of can be related to retirement income. And, retirement income, there's a couple different things you want to look for. And, you never get all of these things in one product. So it's more about a combination of all these things, right? So one is protection, right? You don't want to be retired and have another 08, 09 meltdown and boom, half your money goes away, right?
Right.
But you're going to hopefully be retired for 30 plus years. So you also still need that growth. You still need some of that money growing to combat inflation and, have that money getting bigger. Of course, the only thing you have to have in retirement is income, because otherwise you're just unemployed, right? And
yeah.
So you have to have some income. Some of that stuff has to be not just going up in value, but it has to actually be paying dividends, interest, something that you can withdraw, right, on a monthly basis. And then you need some of that money liquid, because the fridge dies, the roof needs to be repaired, fence blows over, whatever junk happens, right? Life happens. You need some money that's going to be something that you can go grab, in those times where you need that money.
Liquid money, right? Yeah.
Yep.
So tell us the kind of risk you're exposed to if you do not have a 4-pillar retirement like you just mentioned.
Well, if you just think about the 401k is pretty much it's all stocks and bonds. So I call that all market money. So that's all growth potential stuff. It has zero protection. There's usually no options in there to protect yourself from, the values dropping. You might have a money market or something like that. That might be a little bit, but, really not anything. When I look at most people's, their portfolios, the average dividend yield, so and how much the interest and dividends pay, is almost always 1.5%. It's super rare if I ever see anybody over 2, and usually most people are at least at 1. So it's really somewhere in the ones.
Okay.
And so if you need 4 or 5% out of your portfolio in retirement, and you're only getting 1, from dividends and interest, that means you're having to sell shares every single month to get by. And so then, if the market drops that month, you've now locked in those losses. If it drops again, you're locking in even more and more, right? So that's kind of the big risk that you run is when's that downturn? When you're selling shares, the market never goes up straight line, right? It's always all over the place. And so, you're potentially losing a lot because of you don't have some of that money protected and you don't have anything set up for income. I mean, you might have liquidity in like a bank account and stuff, but usually for most of the investments, they can be liquid, but liquid if the market goes down is not so good, right? You want some money that's protected where it won't go down. So that's the biggest risk I find most people run into in retirement.
Okay. Eric, let's talk about then that protection part of our retirement plan. What are we protecting our money from?
Good question. Protecting it from loss, right? Protecting it from it going away. So there are some great tools out there. Ones from insurance companies where they'll pay you a rate based on the stock market. I like to use these in place of bonds. So, a lot of these, they can pay, say, 10% if the market goes up 10%. And so what they do is look 1 year later and how much did the S&P 500 change? If it's anywhere from 0 to 10, you get that number. If it's more than 10, well, all you get is 10. But if it's negative anything, you get 0. You don't lose a dime. And you get to start off at a lower, point in the index. So there's, a lot of higher odds that next year of you getting that 10%. So those can be really good because you can take money out of those. Usually most of them let you take out 10% a year. So you could be doing your withdrawals from there, especially when the market's down. That's where you want to take the money from, something that didn't lose money, right?
Right.
And then when the market goes back up, then you can decide which way you want to take the money from. But, those over time should average 5 to 9% or so. So a lot better than bonds with zero risk. And so, that's a good, easy way to learn more about how to protect your money. And so one of the things that we also have is we're very big about education here. So we've got a digital toolbox that has a couple different things that you read, like, will I outlive my money, which you don't want to do. What's the correct timing for Social Security? Are you paying too much money in taxes and retirement? Copy of my book, Worry Less Wealth, and even a way to set a time to talk with me, Eric Heckman. So if you want to get access to that, super easy. We'll send you the link. All you got to do is text the word toolbox to 800-454-1184. Again, text the word toolbox, 800-454-1184, or go online and download it directly at wealthcreatorradio.com.
And you're listening to Wealth Creator Radio with Eric Heckman of Heckman Financial. I'm Lou Ann Fulmer. All right, let's talk about growth potential. Obviously, we need our money to grow. That's our income in retirement. I think immediately, though, our minds go to investments when we think about growing our money. Is there a way to grow it without investing in the markets, Eric?
Well, I mean, like the index annuity type stuff that we mentioned, that's one option that can grow pretty good and still earn some good interest. There's some alternative investments that are actually investments, but they're not maybe daily traded in the markets. And, a lot of those things like private equity, real estate, other things, those can give you some good growth and, without as much of the volatility up and down. So, it's always, again, it goes back to that, that 4-letter word plan. If you get a plan, then this can all work out. But if you're just kind of doing it by just whatever you see that day or whatever makes sounds good on the radio or on the TV, that's not really a great way to do it. You want to have a plan.
Another pillar that we were talking about for a sturdy retirement would be income. And that kind of, is a pillar that supports really every other pillar. Where do people get their income in retirement from?
Well, most only have Social Security and rarely have a pension. So really they're just getting their income from whatever dividends. And like I said before, they don't get much. So they're usually having to sell assets all the time. So that's a very overlooked area of designing some money that has some super high income. That's what we always have what I like to call steady income section, where we put 10 or 20% into things that pay a lot of income. So that way you don't have to sell as many shares. You got some cash flow building up.
Love it. And then the fourth pillar, liquidity. Again, talk about why that's so important.
Yeah, well, you always want to have that. My sons were scouts. I was a scout, and my youngest made Eagle. And you want to be prepared, like the scouts say. So you want to have that be prepared fund that allows you to have some money that usually about 6 months of expenses. So that way you can go pay for that new fridge, pay for whatever home repair, whatever comes up. So again, we can get a lot more data and a lot more stuff to read and educate yourself. Some really quick things to read and review, but not stuff that takes a ton of time. So the easiest way to do that is just by texting the word toolbox to 800-454-1184. Again, text word toolbox, 800-454-1184, or download directly at wealthcreatorradio.com.
If something's worth doing, it's worth doing right. There's a particular time of life this phrase couldn't be more appropriate. How can you know you'll live the retirement you've always imagined? After all, life can be so unpredictable. You've worked hard and saved. Watch your accounts go up and down with the market. Your advisor says, don't worry, you'll be fine. But you still don't feel confident. Eric Heckman at Heckman Financial has a checklist to help you find out if you're on the right track for retirement. If you can check all the boxes with confidence, you may be ready for retirement. If not, Eric can help you address any potential costly mistakes. To get Eric Heckman at Heckman Financial's complimentary checklist, call or text LIST to 800-454-1184. Call or text LIST to 800-454-1184. Firm offers insurance services. Investment advisory services offered through Heckman Financial and Insurance Services, Inc. Investing involves risk, including the potential loss of principal.
Hello, I'm Luann Fulmer here with Eric Heckman. So happy to have you spend part of your day with us today. When you think about it, some people, well, I think all of us spend decades diligently saving our money, our retirement money, watching our 401ks and our IRAs grow. But a question that many of us fail to ask is, how much of that money will I actually get to keep after taxes? Because you know it. Uncle Sam's going to be entitled to a significant amount of that money. And if you have $1 million in your retirement account, that may affect your taxes. So I'm excited to get into this, Eric. We do talk about this a lot, but I think it's so important. Why are tax strategies so crucial and yet often overlooked by many people for retirement preparation?
Yeah, no, so certainly it's a huge area. And so one of the things I do actually in live events that we do is sometimes I'll ask the question. So I guess, Luann, you can play along here.
Okay.
But
Okay.
let's just say I really feel confident about your ability, so I want to give you a loan. Would you take it?
A loan? Yeah.
Yeah.
I think I'd take a loan.
And no questions asked?
Oh, I guess I would say, when do I have to pay it back and how much interest? Yeah.
Yeah, those are usually most people. That's a I mean, the loan wouldn't sound so great if it was 80% interest and you had to pay it back in a year or something, right?
That's
Or,
true. Then you never mind.
Yeah. So, but sadly, if you think about a 401k, 403b, 457, depending where you work, IRAs, those are same thing. You put money in there. You didn't really ever ask what's the interest rate. On this loan, because the government loaned you the money. They said, we're not going to tax you today. We're going to tax you some other time.
Right.
You forgot to ask when.
Yeah.
And then you forgot to ask how much.
Yeah.
And even if they told you, it wasn't accurate because it's changed.
Mm-hmm.
So the first question of when do you have to pay it back by, well, it used to be 70 and a half. That's when you have to start taking the money out. But that now is 73 if you're born before 1960, 75 if you're after 1960. But again, what is that tax rate? And what we've seen is, a lot of the rate cuts have been good for a lot of people who are retired because, the standard deduction got bigger under the Trump tax laws and stuff. But if you got a lot of money coming out of those taxable accounts, you're going to be much higher bracket often. And now I'm seeing clients in their mid 70s at the highest brackets they've ever been in at their life, which is kind of crazy. You don't think about mid 70-year-olds being super wealthy.
Right.
But, that at least tax wise they are. So that's why it needs to be, it's a critical part. And it's kind of sad that people just, it's just because they never ask the question, right? They're not thinking, they're just putting the money in. We'll figure out how to get it out later. And then once they get there later, it's like, what? And you wouldn't believe how many people don't even realize that they have to pay taxes on their their retirement accounts. Lots of times they thought, oh, no, what? I have to pay tax? It's like, yeah.
Yeah.
Or you've been for the last 20, 30 years as you've been funding these.
Right. Exactly.
Yeah.
So you often talk about how important it is to be diversified. Talk about that for us. What is tax diversification? What do you mean by that?
Yeah. So usually when another thing I do in a lot of live events, and which is always kind of a little fun, is I'll talk about the three buckets that people have. So there's tax deductible, tax deferred, and tax free. So just off the surface, tax free usually sounds pretty good, right?
Yes. I want a lot of my money there.
Yeah. So that's like Roth IRAs.
Yeah.
It's specially designed life insurance, a couple other things. Taxable would be your savings account, brokerage account, things like that.
Mhm.
And then tax deferred. That's all the fours, 401k, 403b, 457, and IRAs. And when I look at people's size of their different various buckets, the tax deductible one, which is the one where you owe all the taxes at the end, that's like the size of a office trash can. It's pretty big.
Yeah.
Now, if you look at the size of their taxable accounts, it's like a red Solo cup. A lot smaller, but there's still something there.
Right.
And then I don't know if you've seen these. I accidentally one time ordered these online, not realizing how small they were. But the tax-free one is pretty much like those red Solo shot glasses.
Oh.
They actually do have shot glasses. They're really dinky.
Oh my gosh.
And so, that is usually how people are tax diversified. And it's awful because you want those buckets to be more the right size, the same size. It's
yes.
not having most stuff where you owe all the tax at the end.
Yeah.
And so, and why is that? Well, I had a client that came to me, he was retiring the next month. He was turning 70. This was when RMDs were 70 and a half, but didn't really matter for him because 100% of his money was all pre-tax money. He had no savings. He had no brokerage accounts, nothing Roth. Everything was taxable. So what's his tax planning? Planning to pay for it.
Yeah.
There is no plan.
Right.
You just pay for it, right? So but if you have different types of assets, you can actually do different strategies, different ways to plan, different ways to do things. So one of the really good ways to learn a little bit more about this is using our Wealth Creator Toolbox. So one of the things we have in there is a report saying, are you paying too much in taxes in retirement? Will your money last as long as you do? That Social Security timing decision, which also plays into a lot of taxation. So definitely get yourself educated. Take a couple minutes to read these things. They're super fast. They're not War and Peace or anything like that. So all you have to do is text the word toolbox to 800-454-1184. Again, text the word toolbox, 800-454-1184, or download directly at wealthcreatorradio.com.
And you're listening to Wealth Creator Radio with Eric Heckman of Heckman Financial. He is a certified financial planner, and it is his passion to help retirees. Oh my gosh, he's been doing this for over 30 years now. And so he would love to guide.
Sound so old.
I know, sorry. Well, let's see here. You started when you're 10, maybe? I don't know.
There you go. There you go.
But anyway, he is passionate about helping retirees. So you have questions, they certainly have answers. So give them a call. And thank you for joining us. This is Wealth Creator Radio. We want to help you create wealth in retirement and worry less. That's his goal for you. Yeah. So Social Security, you touched on that just for a second. I want to get into that because a lot of retirees are surprised to learn that their Social Security benefits are taxable and their Medicare premiums follow along. Their premiums could increase.
The premiums go up. Yeah. So there's this, I jokingly, because we have Uncle Sam, I always call it Aunt Irma.
Yeah.
Irma sounds like a nice old lady, but she's not so nice.
Sounds like it, but
IRMA
not.
stands for Income Related Monthly Adjustment.
Okay.
And basically that's something where depending on how much income you have, your Medicare premiums can go up 50, 100%, 150. They can go up about 400% more. So you can be up to $1,000 per person if you hit the top tax brackets. So this is something that's very sneaky. It's not on TurboTax. It's not on most CPA software or anything like that. I rarely see it on any professional software. We actually have it on our planning software because it is a critical thing. And it's always this weird 2-year delay. So that's the crazy part too, because how do they know, say, for 1 year, so say it's 2026 and they're at the end of 25, they're going to tell you how much you have to, they're going to charge you for 2026, but they don't know your last tax return was only 24. So that's why it's always a 2-year delay. And so when you're 63, that's the income they're going to use for 65 when you first do Social Security. Well, often you're still working then. So
Mm-hmm.
yeah, you got to watch out for those things. It's definitely something that hits a lot of people. But again, getting the information is great. So go on to the Wealth Creator Toolbox. All you have to do is get those great reports, copy my book, and even time to set up a time to talk with me, Eric Heckman, is just texting the word toolbox to 800-454-1184. Again, text the word toolbox, 800-454-1184, or download directly at wealthcreatorradio.com.
Be sure to like and subscribe to Wealth Creator Radio so you can stay up to date on ways to build your wealth and create a retirement you and your family will enjoy for years to come. Like and subscribe today and create your wealth for tomorrow with Wealth Creator Radio.
Thank you for listening today. I'm Lou Ann Fulmer here with Eric Heckman. And, the prospect of retirement is exciting, but also concerning for a lot of Americans because you've built your nest egg. That's very, very important. But what we don't understand are the potential tax implications when we withdraw that money. And so that's what we're going to talk about right now. We want to make sure that you don't give up a lot of money to taxes unknown, right? And you want to make sure that you get to spend your hard-earned money. So let's talk about that, Eric. What specific actions can people take to create those tax-efficient strategies that we always talk about?
Yeah, certainly. Like I said, it's a critical section of planning because most people think the number one expense for retirees and retirement is healthcare, but that's because nobody adds up how much retirees pay for taxes. And taxes, hands down, is far and away the number one thing you're going to pay for in retirement. And one of the things that we do when we're doing that blueprint to worry less wealth is we actually look at your lifetime taxes. And when you look at that lifetime cumulative tax, it's first of all quite depressing, but yeah, kind of shocking too.
Yeah.
And so so if we can lower that number, then that just means more money in your pocket, right? It doesn't mean you need to pick the best next stock, have some sort of huge return or something. Because if you stop losing as much money by giving it away to taxes, you're instantly got more money. So one of the things would be is just looking at what is your tax situation when you're looking at that income plan and you're looking at how much you're taking out every year. What is the tax hit? How much is going to go to taxes? Just knowing that. What's the Social Security going to affect your taxes like? Like in California, we don't tax Social Security, but federal still does. So, there's things like that you want to watch out for. And then really it's the big part, though, is your IRAs and 401ks, all those types of things. If you get more of that to Roth, more of that to being tax-free, your life's going to be so much easier because if you have some tax-free money and some taxable money, so if you're taking them, from both pots of money, you can drain one down a little bit and then the other one and lower your tax bracket. But if it's all taxable and that's it, you're just going to pay the tax and be depressed. So that's why we want to try to avoid that.
Right. So Eric, as you know, I mention it all the time. I'm almost 66. My husband is 65. And what we're trying to do is convert a lot of our money into Roths. I want you to talk about that and how adopting that optimal conversion strategy could be a good way to save for people.
Yeah, no, certainly. So, first of all, we should probably say what a Roth is. A lot of times people don't necessarily know.
Yeah.
So regular IRAs and Roth IRAs, they both do the same thing while they're building up. They're both tax deferred. But the big difference is at the start or the beginning, or start at the end, I should say.
Mm-hmm.
So, with a 401k that may become an IRA or just IRAs, you get a quote tax write-off. I mean, air quote tax write-off, because you're really getting a loan from the government. And they're saying, we're not going to tax you now. We're going to tax you whenever you take it out down the road. So you got a bigger balance that's growing, but a lot of it's not yours. But it looks like yours on paper. So you get excited until you realize, that's not mine. So I always kind of equate it to being, when somebody talks about their house, if their house is worth $1 million and they've got a $300,000 loan, they usually will say they have $700,000 of equity. But if somebody's got $1 million in retirement account, I still have yet to ever meet anybody who says I have $700K of equity in my retirement account. But
that's true. Yeah.
There's
I
no
get it.
zero difference. That's just you don't get a statement.
Yeah.
Whereas the mortgage, you get a statement every month, right? So you know that
Right.
balance.
Mm-hmm.
And so, yeah, so with Roth, the big difference is you get no benefit on the way in. You put that money in, doesn't save any money in your taxes. Doesn't, so it's going to lower your paycheck. If you put $1,000 a month into your 401k, it drops into Roth 401k, it drops your paycheck by 1,000. So, so that's a little bit more painful on that side of things.
Yeah.
But on the other end, if that, money you put away that, say you put in 10 grand one year and that grows to 50, all 50 is yours. And that's why we really want this switch over, because the more you can switch over, and most of the time we're talking, for most of our clients, we're doing $20,000 to $50,000 conversions. We're not doing huge Roth conversions. We're doing small ones where they can stay in that same bracket. So maybe they're still in the 12 or maybe they're in 22, but whatever. We're trying not to go to that next bracket. We're trying to make sure their Medicare premiums don't go up, other things and looking at. And so, yeah, you want to do those small conversions, because if you pay that tax today, and especially if you're not going to need it for a while, not only did you pay the tax, but you also now have that growth growing tax-free for several years.
Yeah.
And, then once you hit retirement, you can turn that on into a stream of income, and that'll be now tax-free. So, yeah, that's the way you want to do it. And so one of the things we've set up is actually a toolbox for people to look at and get some great data. They've got a copy of my book, Worry Less Wealth, some things like, am I paying too much in taxes in retirement? Social Security timing decision. Will my money last as long as I do? So these are quick reports that are probably 10, 15-minute reads, but gives you some great info. If you want to get access to that, it's so easy. All you have to do is text word toolbox to 800-454-1184. Again, text word toolbox, 800-454-1184, or download directly at wealthcreatorradio.com.
And this is Wealth Creator Radio with Eric Heckman. I'm Lou Ann Fulmer. And, here's the thing, Eric. Tax laws are always changing. So, talk about how you do help retirees create a strategy, a tax strategy that is going to provide a little flexibility as their own situation changes and the tax laws evolve over time.
Yeah, well, so having those different buckets of money, having the tax-free, tax-deductible, taxable, that really is what gives you the freedom. And so I've got a client who's one of my first clients, still with me since 1992.
Oh, wow.
And a couple of years back, he likes to do stuff around his house and other things. And he had kind of a, beat up truck that was too beat up finally. And so he needed a new one. And, we looked at it, and if he took money out of his IRA, he would have taken about 30 grand, but out of his Roth, he just needed 20 because he didn't need to take the taxes out to pay that tax bill. And it also wouldn't affect their Social Security and Medicare premium stuff. All this other things won't trigger other taxes. So because he had that money in that Roth, we were able to go just grab it. So, and that's what happens in retirement, right? There's going to be a couple of years where, maybe it's a roof, or maybe it's, some sort of big item. Maybe it's a car, whatever it is.
Yeah. Yeah.
Yeah. And so once you have those big ticket items, if you got a pot of money that's either taxable, where you've got cost basis, so it's not as, taxable to you, or if you got Roth money that's tax-free, it's going to be a lot better than grabbing it all from your non-taxed account, the tax-deferred account, and having to pay all that tax, because that can really mess up your brackets all the way around.
So true. So for those who, have a retirement plan or think they do, but they're listening and going, maybe it's not as tax optimized as I need it. What key strategy elements should they be looking for when they're seeking professional guidance, Eric?
Well, you don't want to be falling into the trap of go talk to the other person. And so what I find is a lot of people in my industry, they're financial advisors. So they say, oh, sorry, we don't do tax advice. So go talk to their tax person. And then the tax person says, well, we don't do financial advice. Go talk to the financial advisor. And then you're stuck in this situation where they're both pointing to each other and nobody's helping you. And I think that's silly. So, that's why I'm certified for doing taxes. And, that's why we have a lot of training on it and a lot of focus on it, because you can't talk about income, investments without talking about taxes. It's all interrelated. So you definitely find somebody who's trained on that. And that's one of the keys. But again, we did set up some information. If you want to set up a time to visit with me, That's also in the toolbox. All that stuff is there for you. So all you have to do is text that word toolbox to 800-454-1184. Again, text word toolbox 800-454-1184, or download directly at wealthcreatorradio.com.
Imagine for a moment that an intense storm is pounding your house. Will the roof leak? Will the siding peel away? Will your basement flood? If your house is properly built and maintained, you'll be fine. But what about your 401k or your investments? The stock market has had a great run the last few years, but is its current turmoil making you feel uneasy? Are you confident your portfolio is built to weather the financial storm? Now may be a great time to have your retirement plan inspected. Call Eric Heckman of Heckman Financial at 800-454-1184 now. Eric will examine your portfolio and show you if your investments are in need of some weatherproofing. Call Eric Heckman of Heckman Financial today at 800-454-1184. That's 800-454-1184. Investment advisory services offered through Heckman Financial Insurance Services, Inc., a registered investment advisor.
Hi, I'm Lou Ann Fulmer here with Eric Heckman. He is president of Heckman Financial. He is also a certified financial planner. He has the education and actually the wisdom and years behind him to help you retire. And if you have any questions, he is here for you. And speaking of questions, I'm going to get to our mailbag here in a moment, Eric, with a lot of retiree questions for you. But first of all, I just want to ask you, what are some questions retirees are bringing to you right now?
Yeah, I mean, for a lot of people, it's, how to downsize your risk. Things get volatile, and, as you get closer to retirement, you're like, ooh, yeah, I care more about not losing it than I do about, having some home runs or some big wins, right? So, and they realize they can't afford to lose it. There's no time to make it up. You can't just hang in there if you're retired, right? Because you need the money.
Yeah.
And so, so there are some great guaranteed options out there. There's some stuff where, you can sometimes earn up to double digits with S&P 500 if it goes up that high, but you don't risk anything on the downside. So, there's a lot of great tools out there. A lot better than there were, several years ago. So definitely something to be looking for and getting some good answers on, because you definitely want to protect some of that money. So for those bad years, which we know will always happen,
right?
About two to three out of every 10 will be bad. So and that's going to happen during retirement too. So you got to have that money ready.
Okay. So the number again, 800-454-1184. You may call or text the word visit if you would like to do that with your own retirement question. Okay. So let's get into our mailbag right now. Eric, this first question is from Terry. And he says, I worked at the same company for 25 years. I had a 401k there, but they had a big merger, and now I'm not sure how to track down that account. Do you have any tips?
Yeah, well, first of all, Terry, don't lose your money. No.
Hang on to that.
Yeah, no, I actually had a client that had lost a 401k, and it was up to 80 grand when she found it. And I think she was like 5 or 10 when she, forgot about it. So,
oh my goodness.
So Terry, if you've been there for that long, you hopefully have a huge balance there. But I mean, typically you can just, look at the old company or just call the company directly. I mean, or even just Google search if it's a big enough company, or you can find the benefits online, who it is. And I mean, they should be sending you something. So, definitely do that. And you probably want to roll that over to an IRA as soon as you can. So that way you always know where it is and don't lose it again.
No, don't. That's the whole goal here. Don't lose your money, right?
Yeah.
Don't lose it.
I mean, don't literally lose your money is first rule. And the second one would be don't lose it. Right.
Okay. Next question for you from our mailbag is from Craig. And he says, I've done a pretty good job keeping track of my budget and my finances my entire adult life. Good job. Why might it be so important then for me to have someone else do this for me in retirement? I bet you get that sometimes.
Yeah, no, it's great. Yeah, great question. And Craig, and so, I mean, one of the things is maybe you don't, right? Maybe you don't need somebody to do it. Maybe you can do it on your own. Some people can. The harder part is also if you're married, will your spouse be able to do it if you're gone? I run into a lot of that where one spouse is the one who does it all, and then the other one doesn't really know about the finances, and it's quite sad and ugly when the other person passes away, and all of a sudden this person has no clue about anything, has to learn it all and figure it all out. So, it's good to meet with somebody else just for that aspect sometimes. But also the rules are very different in withdrawal, because of, he's talking about, he had a budget for his paycheck, but he wasn't creating his paycheck.
That's right.
Right. So,
Yeah.
so it's one thing to have that budget, and the budget is a critical thing to know how much you're going to be spending. But in retirement, you also have to create your paycheck. So you have to figure out those various different accounts you have. You get 401k here, IRA here, whatever brokerage account, savings accounts. Where is that check going to come from? Where are you going to get those various dollars? It's
right.
Retirement's not about one check. It's about lots of little checks that add up to what that one check used to be. And so,
exactly.
So that's really where the blueprint to worry less wealth. That's what we do here is, we look at that and say, okay, let's take all those different accounts, that spending level, and let's run that out with taxes, inflation, and interest, everything, and see what that looks like. And is that money going to last? And if so, yay. If not, does it run out at 75 or 95? Because big difference between the two, right?
Yeah, 20-something.
And you want to know that now, not later on.
Right.
So that's the first part. And then looking at those investments, are they putting off dividends? Are they putting off cash flow? Because if you don't have the cash flow to get that money, how are you going to spend it? You can't it's not all about growth now. Now it's about actually getting money deposited into your checking account, right? To pay for those expenses. What's the tax ramifications along the way? The healthcare options, pre-65, post-65 for Medicare, all those types of things, long-term care. And then lastly, legacy. Who's getting your stuff when it's gone? Are the accounts set up right? So that's the 5 areas of the blueprint to worry less wealth. And it's something we can help you with. If you wanted to set up a time to talk, we can set up a 15 to 30-minute phone call. All you got to do is text the word visit to 800-454-1184. Again, text the word visit 800-454-1184, or book directly online at wealthcreatorradio.com.
We made it very simple for you, okay? We would definitely want to get your questions answered. So there are a lot of ways you can get a hold of Eric and our awesome team at Heckman Financial. And thank you so much for joining us. This is Wealth Creator Radio. I'm Luann Fulmer here with Eric, and we're digging into our Wealth Creator mailbag. Next question, Eric, is from Michelle. And she says, my dad has always been a worrier. But now I'm afraid he's going to worry himself to death over every little thing, especially since he's constantly on social media. And there's always some big scary headline that he's sharing with everyone all the time. And I don't think this is healthy. Is there anything that you can share with me on how I can talk to him about the financial news that seems to be scaring him all the time?
Yeah, I mean, there's definitely a difference when I meet with clients that when they first retire, after about a year or two, you can see the ones who are more active and the ones who stay home more.
Really?
Because the ones who stay home more watch too much TV, and they start getting freaked out about everything. Because the only thing, if it bleeds, it leads, right? Is the old phrase. And so you only hear all the negative stuff. Social media. If you read one story and it was bad, it's designed to send you more of the same. And so it's just those algorithms just beat you up, and it's awful. So, I mean, one of the biggest things, at least, my mom was our chief worrying officer, and, she did a lot of worrying. So that's why our process is called the Blueprint to Worry Less Wealth.
Yeah.
So one of the easiest ways to not worry is have some money guaranteed, have some money that's not going to go anywhere. It's guaranteed, can't outlive it. That'd be one of the things. Because if you have more of his money guaranteed, then whatever scary headline doesn't apply, right? And if it doesn't apply, you can then say, hey, Dad, ignore it, right? And, move on. But, so I think the biggest thing would be having more guaranteed, more protected. And then, the worries can be ignored. But, also maybe just get outside more or turn off the screens. Or
don't watch it. Get off the screens, whatever they are.
There's too much of the negative stuff out there for sure.
Very good. Great advice. Okay. Last question for you from Will. And this is a good one. Of course, they all are. But what is your advice for someone who's 10 years away from retirement and doesn't want to make any big financial mistakes?
Well, first of all, we're all going to make financial mistakes. So, don't worry too much, right? Just, try to make as few as you can. But But no, really, it's more about just getting lined up, having, where maybe you can do some Roth conversions. Maybe you can start, look at the tax treatment, start allocating stuff more to some guaranteed, locking in some of those numbers. That is the exact time when people should really be reaching out to us. Lots of times we have people talking to us 1 or 2 years, or like I had one recently last week. I retired like last week. And now you're first now taking, meet with somebody. It's like a little late. So yeah. So definitely if you're getting close to retirement, that's the time you should be doing planning. That's why you should come visit with us. So set up a 15 to 30 minute phone call. All you got to do is text the word visit to 800-454-1184. Again, text the word visit 800-454-1184, or book directly at wealthcreatorradio.com.
Thinking about healthcare costs, long-term care expenses, and income needs in retirement? How will you afford it all? And what can you do now to help ensure your loved ones will be okay when you're gone? Eric Heckman at Heckman Financial has access to tools and strategies that can help you pursue your retirement dreams without taking on too much risk with your money. Interest rates are the highest they've been in decades, so take advantage of this seemingly once-in-a-lifetime opportunity to help protect your retirement before it's gone. Learn about the tools and features available today that could provide bonuses, potentially adding up to tens of thousands of dollars in additional income when medical needs arise. Schedule your visit with Eric Heckman at Heckman Financial today by calling 800-454-1184. That's 800-454-1184. These opportunities won't last forever, so call now to help protect your future. 800-454-1184.
Hello, thank you so much for joining us today. I'm Lou Ann Fulmer here with Eric Heckman. And now Eric is going to give us a wealth success story from a retiree or a couple. This is always a great lesson, a really good example for us to see how things can work out for the best for retirees. So I can't wait to hear what you have for us today, Eric.
Yeah, well, I mean, this one's, I guess, a couple different people's stories.
Okay, that's fine.
Yeah, so, I had some clients recently that I don't know if you just call it lucky or what, well, has to be lucky, really. They just happened to buy, a Tesla back in 2011 for almost nothing, and, shot up a ton. And then, it was going up after the election. And then, we said, well, okay, things are going a little weird. So we started putting some stop losses in, and, those triggered, and, meaning stop loss is basically when you say, let's sell the stock at a certain number, and, you'll just, if it drops below that number, it triggers it and sells it off, and and protects you from having a huge loss. And so, they sold it, within weeks of it dropping over $100 more a share from where they sold it. So if they had wrote it down, it would have been pretty ugly. And,
right.
I've had some other clients that, sometimes it's lucky, right? You just happen to pick a good stock. Sometimes it's, you worked for a great company. I've got one client that's been in Apple for a long time, and we just kind of have a thing where we sell off 10 to 15% every single year. And some years he's got less Apple. Sometimes he actually ends up with more. So it's done very well.
Yeah.
But there's also other clients that those stocks never did come back, right? And so had they not sold, had they wrote it up and back down, unfortunately, right? That's what happens to a lot of people. They buy a stock and they say, oh yeah, well, we'll sell it when it goes super high. And then of course, once it goes high, no, I'm not going to sell it. And then once it goes down low, oh, well, I can't sell it now. It's too low. Well, yeah, okay, that was not the point.
Yeah.
The point was to convert that into money for you at some point. So, so I think one of the biggest lessons really is for anybody who has who has gone through the process of figuring out the two critical things of anytime you buy an investment. One is, first of all, why are you buying that? Why that stock? Why that fund? Why that, whatever. And then secondly, under what circumstances are you going to get rid of that investment? Positive and negative, not just positive. You got to think of the negative too. And, and so that's one of the critical things, because I've seen way too many times where people just ride the things right back down, and, they were a former millionaire, not a current one, right? Because they had the money and had they sold, but they didn't sell in time. And so, yeah, my clients who've had that kind of discipline, it's really worked out well. Thank you for tuning in to Wealth Creator Radio. I'm Eric Heckman, and it's been a pleasure guiding you towards a more confident and secure retirement. Remember, my responsibility is to always do what's right for you, our client. Together, we can cut out that fancy-sounding financial jargon that doesn't help and focus on what truly matters for your financial future. If you're ready to take control of your retirement planning and build a personalized income plan, contact us at 800-454-1184 and text the word Toolbox to schedule a complimentary consultation. If you're looking for more resources and tools to build your retirement future, don't forget to check out that Wealth Creator Toolbox, your toolkit for a secure and confident retirement journey. Until next time, retire more and worry less with Wealth Creator Radio.
Information provided during Wealth Creator Radio is for illustrative purposes only and does not constitute investment, tax, or legal advice. Information has been obtained from sources that are deemed to be reliable, but their accuracy and completeness cannot be guaranteed. Always consult with a qualified investment, legal, or tax professional before taking any action. Annuity guarantees are based solely on the financial strength and claims-paying ability of the issuing company. Individuals should thoroughly review the contract for specific details of the product features and costs. Income payments and withdrawals from deferred annuities are generally taxable as ordinary income in the year they are taken. Eric Heckman offers investment advisory services through Heckman Financial and Insurance Services, Inc., a registered investment advisor. Any tax advice given as part of this presentation is not intended to be used and cannot be used by the taxpayer for the purpose of avoiding tax penalties or promoting, marketing, or recommending to another party any matter or transaction addressed herein. The views and opinions expressed in the program are not necessarily those of the radio station or its sponsors, and they should not construe as legal, tax, or investment advice. You should always consult the appropriate advisor before making any financial decision.